Hey, Dan Passarelli here. I want to talk today about bubbles. Bubbles in the stock market, they come every once in a while. And sometimes people express that there is a bubble in the market when in fact there's not. So some of the questions that we want to deal with in this video are, what is a bubble? What is it, good or bad? And how do I know for sure that there actually is indeed a bubble? Well, first of all, what this term bubble means is that assets are inflated, just like a bubble that gets really big that can pop. That's basically the same idea that we're talking about. Stocks get just up to such a big height that they get to the point where inevitably they have to pop, and then that means the prices come down. And so there's risk there for investors and for traders. And so it's important to understand the existence of them. Now, is it good or bad? Well, it could be both. I mean, for investors, typically we look at that as bad, but that's only if you're a passive investor that doesn't really try and empower yourself and try and take control of your investing and of your trading. If all you do is just buy and hold and you're at the mercy of the markets, then clearly it's bad. But if you take action and you hedge yourself by doing things like married put strategies, collar strategies, even split time collar strategies, or simply protect yourself in other ways by taking some bearish positions along with your bullish positions, that can make the bubble less risky and in fact maybe even a non-event. Now, for traders who are a bit more active, trying to take advantage of more short-term moves in the market, a bubble can potentially be an actual good thing, because option traders are not always just long the market, positive delta. Option traders can make money if the market goes up or if it goes down, or even if it's just volatile, or even if it just trades sideways. So there's a lot of flexibility there. But understanding when a bubble exists ends up being the key in both of those scenarios. How do we know that a bubble exists? Well, first of all, one of the best ways to look at it is by looking at PE ratios. That's price to earnings ratios. All stocks and the S&P 500 as a whole trade at a certain PE multiple. And when the price relative to the earnings stream gets really high, gets historically very high compared to what it's been in the past, that can be one big indication of a bubble. Now, bubbles can be caused by a lot of things. Over exuberance in the markets is one thing. Also, interest rates. When interest rates are very low for a long period of time, people can't invest in CDs or in bank accounts or traditional interest-bearing assets. And so the only thing they can do with their money is to put it into the stock market, and all that buying of more stocks drives the price higher. So we watch interest rates and we watch things like that to get a little bit of a feel for what's going on, whether bubbles exist, and what actions we need to take as active traders and investors. I'm Dan Passarelli of Market Taker Mentoring. Trade well.